Trading is a business of opportunity, and the more you realize this, the better your trading results. Welcome to this week's edition of Ntfx Weekly Forex Insights. Just as usual, we're going to start with DXY. And my analysis this week, we have to start with weekly. I'll start with weekly, the 4 hours, and then the 15 minutes. This is how I'm going to proceed with my analysis, all right? So that you will see the bigger picture, you will see the immediate trend or immediate structure, and you see how your entries should look like. I think following this guideline will make your trading a success. Remember that it is not compulsory that you stick to the time frame that I choose whenever I want to analyze the market. Okay, you can select your time frame that reflects the type of trading you are. If you are a scalper, you cannot go by this route. It's not going to work for you. Okay, if you are a swing trader, okay, this can work for you. And then also looking at daily in place of 4 hours will also be okay for you. All right, looking at 5 minutes in place of 15 minutes may be okay. Some people looking at 30 minutes in place of 15 minutes can also be okay for you. So it's not a must that you stick to the selection of time frame, but you should use wisdom and select your time frame to reflect the type of trader that you are. But weekly time frame, looking at DXY, you see that whenever you have a market that breaks structure this way, once structure is broken this way, you have to start to be careful in looking for buy opportunity after a break of structure to the upside. You have to be careful looking for buy opportunity because two things can happen. It is either the market will go on a reversal or will go on a pullback before it goes. So when you are looking for buy opportunity after a break of structure to the upside, you may be caught off guard. All right. So applying this structure that I've told you on DXY, you will see that right here after this liquidity sweep, all right, you have it goes make a corrective structure, it breaks structure again on a weekly time frame. So once this structure is broken, you have to be careful about how you buy, except you have a correct corrective structure on the H4 time frame before you note that it has to make another push to the upside. Is that okay now? So now if you go to H4 time frame, what do you see? H4 time frame, you see that right here you have a break of structure. Then let us analyze the corrective structure that we see here. Just let's analyze it. You have a push down. This is a corrective structure in the middle, which is what is called a connector. Well-defined three-wave corrective structure in the middle of a two impulses is what is called a connector. This one, push down, corrective structure, another push down. This three-wave structure here, guys, this three-wave structure right in the middle here. This three-wave structure is what is called a connector. So that is what you'll be looking forward to seeing for you to analyze very well. So you have this three-wave down, but you agree with me that this three-wave down is not enough corrective structure for this push to the upside. It is not enough. Okay, that's why the market is developing a complex structure as you see here. Right here in the middle here, you have another corrective structure here. All right, it's another corrective structure, impulse, and then move up. This in the middle, then this one, the three-wave down here, you need to have it here. So that is why we're expecting DSY to now make a push down. All right, it makes a push up, corrective structure, a push up, and a push down. If you can go like this and break this low, then you have this structure complete as a three-wave down, three-wave up, and a three-wave down to break this low. This will be a complete corrective structure for more upside. Okay, the complete corrective structure for more upside. So everything you are seeing in the middle here, all right, the market at the beginning of the week, the market is going to play at the middle here, not doing anything to just consolidate. But as soon as consolidation is over, and maybe along this corrective structure here, you break it to the upside. Just know that from here, you have to look for a 15-minute corrective structure, sell it to break this low. Okay, so this is the forecast for DXY to complete the corrective structure. You can see that on the weekly time frame, you cannot just come and sell. But if you leave it and on the 4 hours, you see a complete corrective structure, then it's telling you more upside. Okay, that's how it is on DXY. Let's go to GBP USD. All right, GBP USD, look at it on the weekly time frame. Let's see how it's playing on the weekly time frame. You see it here. It's just consolidating for a very long time. Look at GU consolidating along this range. So if it's consolidating along that range, once we are edging closer to the upper range, what does it tell you? We are about to get a move to the upside. Okay, look at it here. All right. This is 3 wave down. You have a push up and a liquidity sweep and a breakdown. So once this gets to this level, you have to sell, because when you have a liquidity sweep here, you don't need a structure. You don't need a corrective structure to the upside for you to start looking for sell. That is the principle. That is the principle that we use. That is not in Elliott wave theory, but today we use this principle because we understand what liquidity sweep is all about. Remember that when you study the foundational theory of wave analysis, which is the Elliott wave theory, you see that we didn't mention anything called liquidity there. But because we understand what liquidity is all about, we know that when you have a liquidity sweep and market pull back to the swept area, you don't need any kind of structure. You don't need any inducement before you look for sell opportunity to the downside. That's exactly what is at play here. Okay, so now on the weekly time frame, we now have this to the upside. We now need it to come up here. Once it come up here, we look for structure to start selling GBP USD. So on the 4 hours time frame, let's see if we have a structure. If we have a structure, remember we want it to get to the upper side here. So if it has to get to the upper side, then what do we want? All right, you know that going by a running flat, this market can start falling from this level, because right here you have a corrective structure here. You have an impulse here, you have an impulse here. That is in the middle. So you have this one here, then you have this one here. So which is a complete structure for this to go down and this to go down. This is a complete structure in the middle. All right. So if this is A, this becomes B, and this becomes C. So, but how do we know whether this B here is complete or not? If it gives us corrective structure for sell here, we keep selling, this becomes a running flat. But if it wants to make an expanding flat, it then means that this we need to push up to break this top. Okay, we need to push up to break this top. Once it breaks this top, then from here we're looking for 4-hour structure to sell GBP USD to the downside. But for now, there is nothing to suggest to us that we have to start selling to the upside. Why? Because right here you have a break of structure. If you have this and you have another structure like this and you have this, this is a well-defined corrective structure. It then means from here we are going to be looking for 15-minute structure here to buy GBP USD to the upside to break this top and achieve the expanding flat that we see here. Break this top. Once you break this top from here, we look for sell opportunity to the downside. Is that okay now? So what you need to watch out for is that this week you need to watch out what type of corrective structure does it produce for you here. As it is now, it has made a break of structure, and right here is making a gradual push down. This is mere pullback. Okay, if it makes something like this and come like this without breaking this low, then you can start looking for buy opportunity from here. Even if you break this low, it then means that this is a part of the corrective structure. So which means that you have this to break this top, and definitely you have a push down. All right, just as you have something like this, if you have a break of structure here and you have a corrective structure that now break this low, this is not an impulse for continuation to the upside, but a part of the corrective structure. So instead of this to be named as 1, 2, 3, 4, and 5, it will no longer be that. Okay, you won't name it like that. It will be A, B, and C. It will be A, B, and C. Why? Because your corrective structure has broken this level of impulse. It is an invalidation level. Once you break it, this is no longer an impulse. It's a part of your corrective structure. Is that okay now? So once you have this corrective structure and you have this does not break this low, then look for buy opportunity from here to the upside. Okay, that's it for GBP USD. For Euro USD on the weekly time frame, you have on AUD USD rather, on weekly time frame, what do you have here? You have this push down, guys, does not break this low. Does not break this low. So if it does not break this low, where is it going to, where will it have gotten liquidity to keep pushing to the upside? Which means that this move down you see, whatever you see here is a pullback for more downside to take this liquidity, equal low that you see here. Is that okay now? So once we have this like this, we go to 4 hours time frame. Remember, we are looking for it to push up for a corrective structure. Okay? To push up for a corrective structure, and you are having it here, break of structure, and you are having the middle here, this is a connector, this is a connector, and you have a push up, and you have a push up. Okay? This in itself is a complete corrective structure for what? For downside. Okay? It's a complete corrective structure for downside. So, but what we need to see is simple. What we need to see is simple. Let us see how it's going to develop, because it's aiming at coming to take this low. It has to take this low before any move to the upside. Right now, if you look at this level, it's gradually coming down, but we need to see a complete corrective structure. If it goes up like this, no problem. Let it break down, then give you corrective structure. Once we give you here on the 4 hours time frame, you now go to 15 minutes or lower time frame and look for entry for market to push down. But AUD USD is prone to sell off than any buy opportunity you can think of, because on the weekly time frame is showing a pullback on the weekly. Can you see? This is a pullback on the weekly. It is not, don't ever think this will come to buy to take this top. No. Why is this so? Because right here, you have it here, break structure and come down. This is a sign of reversal. When you have market break structure and immediately come right down, this is a V pattern, which is a sign of what? Of a reversal. If it's not a reversal, once it breaks structure, it will form a corrective structure like this. For what? For more push up. But it did not form that corrective structure. Rather, it broke structure and came down right away. This is a V shape, a V pattern, which is a characteristic of reversal. So everything you are seeing here is a pullback on the lower time frame for breakdown to take this low. Is that okay now? So I'm not going to buy AUD USD at the current level. I'm going to be looking for sell. And you can see that it's in line with what I told you, that if you have this is a connector, if you have a break of structure, okay, you have a break of structure this way, you don't start looking for buy opportunity after break of structure. Why? The instrument is already overbought. It's already weak to buy. It's not in the demand zone. So you couldn't have bought it. It's not wise to do that. But right here, you can do the buy here. After this connector, right here, you can do the buy to the upside. Are you okay now? So that is how it is. Look for sell opportunity on AUD USD. If this wants to break this top one more time, no problem. At this point, look for sell opportunity to the downside. If it does not want to do that, it will give you corrective structure this way. All right, from here, look for sell opportunity to the downside. Okay. Next, let's look at Euro USD. I gave this chart to you. The same thing is applicable on Euro USD. Right here, you see corrective structure, upside, break here, liquidity sweep, come down. As a breakdown, you don't need any structure. You don't need any inducement. All you want is for this market to come to the sweep zone. This sweep zone, rather, right here, sweep zone, right here. So once it's come there, start looking for structure to sell to the downside. So when you go to 4 hours time frame, can you see right here? Can you see right here? You see an impulse. This is A, 1, 2, and 3. That's B, and then this is C. So at this point, this is where you look for sell opportunity to the downside. Okay, and then you have the breakout structure, and right here you have the corrective structure again. You have the corrective structure, another move to the downside. Right here, you have another corrective structure. Can you see A, B, and C? Right here, breakdown to the downside. So now, what are we saying here? This is another corrective structure. Now, let me teach you how to analyze this. This is a connector, A, C, and you have the middle. Always look for the 3 waves that is developed in the middle. So this is a 3-wave structure in the middle, and you have another one here. Okay, so you have this 3-wave up, 3-wave down. What do you need? 3-wave ups. And how do you get the 3-wave up? Let me do it again so that you understand. This is a connector in the middle. You see A, 1, 2, 3, and C. Can you see? So this is a B, and C. Can you see? This is another connector here. 3-wave down, A, B, and C. And what do you need here? 3 waves up. Can you see? Boom. If this one comes down and take this low, then the connector is established. So from this level, you have to take this up to come and break this top here. Okay? To come and break this top here. Once this top is broken, then you have something like this. Break of structure, 3-wave up, 3-wave down, and what? 3-wave up to break this level for liquidity. Do you get the logic now? So that's how we are going to be looking at euro dollar this week. Just calm down, allow this to happen. We need a 3-wave up, and right now you have an impulse, you have a pullback, you have an impulse, you have this corrective structure. Okay, break it like this. Anytime it breaks down and take this low here, you know that your corrective structure is over. You now need this up move to break this top. Can you see that this 3-wave move up is gradually resembling this 3-wave up here in size? You can see how messy the connector is here. That is how messy this one will be. Okay, after it has developed so messy like that, and it breaks up to break this top, then you know that the corrective structure is over. This is where you can now begin to look for structure on 15 minutes time frame to sell. Let the structure align with what? With overlap. Is that okay now? So this is how to look at the market in such a way that you'll be targeting the opportunity that exists in the market, not just coming and just be trading anyhow. No, you have to allow this to take this one. Then you can trade this buy to the upside to take this top. Once it is done, look for sell opportunity for the downside. Why? 3 waves up, 3 waves down, 3 waves up. This is a correct and complete corrective structure for you to start looking for sell. And then for those that want to use this time frame selection for swing trading, Once you catch a sell opportunity here, you are holding it until you break this low, break this low, break this low, because this is supposed to be a continuation move to the downside. When you have an impulse here, you must have a continuation here to the downside. For every impulse, there must be corrective structure for another impulse. That's exactly what we are doing. And even if you look at the corrective structure in the middle, you can see that for every impulse, we are looking for corrective structure, then for another impulse. Is that okay now? So this is what you are going to be doing on Euro USD this week. First is to catch this buy move to break this top, and after that, you catch this sell to the downside. Is that okay now? Yes. Let's look at USD JPY. All right. If you look at weekly time frame, you see that USD JPY is still bullish, but it still boils down to the same thing I told you. All right. That once you are having a break of structure to the upside on the higher time frame, you have to be extremely cautious. You have to be extremely careful not to continue to look for buy, because at any point in time, it will be caught unaware. Okay, that's the same thing we are saying here. We have broken the structure to the upside. We have to be very careful at this point, because market will either make a reversal or it will make a pullback or a corrective structure. Right now, we are seeing a corrective structure at play. So how do we read this? You can see an impulse. You can see a three-wave corrective structure to break this A. At this point in time, that's your trade setup to the upside. And now, what do you see again? You see, we are supposed to make a push to the upside to complete this bullish structure. But what are we saying here? You have upside, you have impulse, impulse, then three waves here, three waves here. So what do you need to do next? This impulse that happened here, you must have it here to break this low. Once you have it here, then you must have this to break the top. This will be the one that will break all this top. But in all, even if you cannot participate in the buy opportunity that will be provided here to the upside, if you cannot participate, wait. As soon as you clear all this liquidity, all right, as soon as you clear it, there is a massive sell that will come from upside here. Do not miss it. This massive sell-off you see here, right here, is going to come here. Boom. Either to stop here, or to break this low. All right? Do not miss this massive sell-off. I am telling you again, as I always told you, do not miss this massive sell-off. Okay? It's going to come. It's going to come. Everything that you are seeing at the middle here, they are just corrective structure. This move here will come here. All right? Either to break this low and break this low, or only to break this low and begin to move to the upside. But first thing, allow this move to come down. Okay, once you take this low from here, go up, then you have A, B, and C at the middle. After A, B, after this corrective structure, okay, you have this, you have this. That is A, B, and C. Let me do it correctly for you to understand. This is A, B, and C. This is a corrective structure. Then we want to move to the upside, which is what you see here. Something like this, something like this. So once you have something like this, then you have A, you have B, you have C. And then from here, this move will come. What I'm targeting is not the move within this consolidation. It is the move that will proceed to the downside to break this low. After that, yes, you can now be looking for buy setup to the upside. So can you see now, even if I don't give update analysis, if I don't give analysis on this update next week, you already know what will happen ahead of time. Now, remember USD card, we were here when I kept telling you that USD card will make a move to the upside. The initial target was to clear this liquidity. All right, but when we clear that liquidity, and there was no sign that USD card was going to reverse. What did I tell you? I said this is another target. Once we clear this target, USD card will drop. Can you see? Immediately we clear this target, USD card dropped. So what do we need now to participate to keep selling until we break this low? We'll be selling now until what? Until we break this low. So what we need to do is to look for structure on the H4 time frame. All right. We're looking for structure on the H4 time frame. So look at it here. Right here, you have had a push down. Okay, a push down, even though it's making something like this, no problem. It's still part of the impulsive structure to the downside. You now need a corrective structure A, B, and C. From here, go to lower time frame, 15 minutes, and look for a sell to the downside. You can also give something like this. A, B will take this low. What does it mean? You must have a C that will end here or that will end here. If it end here, then it becomes a running flat for the downside. Okay? If it ends at the upper side here, then it becomes what? Expanding flat for the downside. Is that okay now? So that is what you will do on this USD card. Wait, your structure is not developed first. So, and of course, you know that the critical part of trading is the waiting. That is what some people hate so much. Some people don't like to wait. And the moment you are so obsessed with waiting, you are not going to get anything out of the market. So right now, I saw USD card when it was here, when it was here, when it was here, when it was here. It didn't give me structure. What I needed was initial impulse, then corrective structure from here. I know for sure that we are going to have a push down. That's what? That's going to break this loop. That is how to trade. All right, that's the focus on USD card. Now let's go to gold. All right, if you look at gold right here, look at gold. Let's see. Let us load on daily time frame, on weekly time frame. Now, seeing gold here, you apply the same principle I told you before. You have a push down, a pullback, and a push down that have broken structure. Once you have broken this structure to the downside, you cannot be looking for sell again. Look at it. On the weekly time frame, once you break this structure and the market is here, you cannot be looking for sell again. It will catch you unaware. You will lose because you are at a position where the market is too weak to sell, where the market is too cheap. Buyers are staring at buyers' face. Buyers want to buy this market. Then if you are selling, then you are swimming against the tide. And when you swim against this tide, the force of the wave is going to push you aside. It's going to carry you and your payload aside, going to sweep you offshore. Do you understand now? So when a market has broken, has a structure that is broken on the higher time frame, be careful with the decision you take on it. Right here on gold, we are looking for buy opportunity. Okay? And in looking for buy opportunity, you must see structure for a buy. Okay? You must see structure for a buy. So how do you analyze this structure right here? Do you notice something that after this push down, what do you see here? If you see this as a running flat, then you need this to push down. So if this low is not broken, then you have to start looking for a buy to the upside. Do you see that this is a corrective structure? A three wave down, okay, a running flat here, and a what? And a three wave down. But the only challenge is that this last three wave down is shorter and smaller than this first three waves up. Do you understand now? It's shorter. But nevertheless, what can happen is that we are not looking for sell opportunity. We are looking for buy opportunity. So the possibility is there that after this push up and you have this three wave down, you can have a push up that take this top and this one come down to break this low once more time. But once it comes down to break this low and it has taken this level, what happened? This is no longer an impulse for a buy. This becomes a part of the corrective structure A, B. It then means gold must make a move up C and then come down again. I believe somebody is understanding this principle now. This is the basic principle of wave analysis that will make you to distinguish when a market is ready to continue to perpetually trend or a market is not ready yet, that it has to catch some liquidity to proceed in the existing direction. Do you understand? So, but if this one does not happen and we don't have we have this low protected, then that means that this running flat is enough for this. Then from here, you have to start to make a move to the upside. So if you go to lower time frame, you can quickly catch a possible buy opportunity on gold. Okay, it's a possible buy opportunity. Can you see? You must wait. You must wait. So let me show you on. You have already seen on 4 hours time frame that right here you have an impulse, you have A, B, and C corrective structure that break this one. You need a push up here that break this top. That is the basic principle. And you're going to 15 minutes. You're going to 15 minutes time frame. All right. What do you see in order for us to enter this market, for us to enter the buy? What do you see? You see, what do you see? A build-up of liquidity taking impulse. All you need is corrective structure here. This is the basic principle of entry that everybody must understand and utilize. All right? You are making entry on 15 minutes and you are making your target on 4 hours. This is why each time you want to take a trade based on this methodology, you catch no less than 1 to 5. All right, you catch no less than 1 to 5. So just replicate this entry methodology I've showed you with when 4 hours. When 4 hour structure is completed here, you have to wait for a build up here. Okay, liquidity taking, impulse, pullback, or correction. From here, take a trade to the upside. Okay, you are taking a trade and you are setting 15 minutes for your stop loss and entry, and you are setting your target at H4. Is that okay now? So that is how you do your entry. And somebody will ask me, what if at this point in time you don't see liquidity build up? Most of the time, once I don't see liquidity cleared before the import, I don't participate. Let me show you an example. Look at this trade that I took here. What happened here? As this structure was coming, this is a push down. It has taken liquidity here. Of course, 4 hours was complete. But what happened? Look at the impulse I got. And look at the time I got the impulse, 11 o'clock. Okay? Right, 11, 12. This is London session. All right? But right here, look at the liquidity here. Look at the liquidity. Market took it and then V pattern. I told you, once you want to talk of reversal, you can't have a better description for it except V pattern, because it will come, take liquidity and push up again. So after it pushes up, what do you need to see? Corrective structure. Look at 3 wave at the middle connector. Can you see? Somebody cannot see this. I will show you. Look at a push down, a push down. Look at a connector in between. That's all. So this is what is your entry to the upside. The stop loss is down here. Okay? Boom. That is how it is done, guys. That's how it is done. You will see the entry methodology in every part of the structure where 4 hours time frame structure is complete. Is that okay now? So I believe this opportunity will come for a move to the upside. And once we clear this top, we should be heading downside for gold. Then you have, last but not the least, you have BTC. You can see all forecasts that we have made on BTC are all each perfect. Can you see right here? We mentioned that on the weekly time frame, we want BTC to still go down. But what did I tell you based on when the structure has broken? When the structure is broken, you can no longer be looking for a sell opportunity here. You have to look for buy, either for corrective structure or for pullback. Right now, we are looking for buy to complete this corrective structure for more downside for gold. All right. So if you go to H4 time frame for gold, what do you see? You know, right here, I've given you the analysis that for gold, right here, we have had a 3-wave up and then we have a 3-wave down. This 3-wave down has broken this level. That was the singular structure that suggested to me that we need to catch this wave C. This is wave A, this is wave B. We need to catch this wave C to the upside to break this top. Once this top is broken, you are having a massive sell-off of BTC to the upside. This becomes A, B, and C. Is that okay now? A, B, and C. So we are still, the C is still in the making. It's still in the making. Right now, you have liquidity sweep here. You have this move to the upside. You have this, you have this, you have three-wave structure here. Then this impulse here must come here, for which I gave the forecast to my community members. Right here, the buy must come. And then, and after the buy comes, it means that you have this corrective structure at the middle. Then this push down must come here. This was also called on the community. This cell must come here. And this is how you now have a balanced structure. For what? For upside. Okay? Some people don't understand what I've just done here. Let me explain to you. Look at it. What happened is this. You are having a market that is trending up. Okay? You now make a push to the downside. Now make a push to the upside, which is this red and green candle. All right? Then you are now waiting for corrective structure, because market cannot be making flash up and flash down without corrective structure. It is the phase, it is the last impulse for which after it make a corrective structure that will tell us what the pair is intending to do. So if you now have a corrective structure here, it then means that you must complete this impulse here. Boom. Okay? After you complete this impulse, that is what this move up has just accomplished. So what happened is that this becomes a corrective structure. Then what of this one down? Because this one has become A. This complete corrective structure has become B. What of this A? It has to complete is C. That's why you now have C here. That's why you have this one here, C here. So you now have A, B, and C. So once you have this A, B, and C, you have complete corrective structure. This move up has to now what? Has to now come here to break this top. That is why you now have this move up here, for which it was projected. From here, you have a move to the upside. Then after that, this is just a corrective structure. This is another move to the upside. Okay, this is another move to the upside. Is that okay now? Until we achieve our weekly target. So what we are looking for now is if we can see corrective structure here, we buy BTC again to the upside to clear this top. That is what we want. And our ultimate objective is to clear this level. To clear this level here. We want to clear this level in order for us to have access to liquidity. Once we clear this level, BTC will make a massive move. Here, a massive move to the upside to clear this. I'm projecting 45, around 45 will do. 40 to 45 or 50, it will be okay for BTC. So prepare for sell-off after this level is broken. All right. So that is for BTC USD, guys. And I think you can use this idea to really trade very well. And if you are interested in taking Ntfx trading course, you can see our website is there for you to learn. All right, it's there for you to learn. You have our courses, a lot of our courses for you. You have trend mastery course. You have advanced market forecasting techniques using wave analysis. This is the techniques you will use to analyze the market, and the course is very cheap. You can see what you learn there. You learn the basic. These are basic courses. You learn the advanced market forecasting. Just about 7 videos. Very rich, very rich. Even myself that produce it, sometimes I come to enjoy it. And whenever I'm enjoying it, I just feel happy that I'm watching something very nice that which is my knowledge. You see the fundamental analysis and how to use them in your trading. You see that in market forecasting course. You also see trend mastery. This is also very wonderful. All right. It's not everybody that want to learn how to forecast the market. But if you don't want that, you can just stay with this trend mastery, and then you learn how to trade with inducement and liquidity. You learn how to trade with inducement and liquidity. It's a whole lot of content that we have put together for you here. You also see fundamental analysis. So it's not that you have access to trend mastery, you don't have access to market forecasting, and you'll not be able to do much from the course. Okay, so you can just explore the course and see what we've got to offer you. All right, what we've got to offer you is you can see testimonial from students. You join our community free of charge when you buy the course, and then you get to learn from the expert. All right, so that will be the end of this week edition of Ntfx market weekly market forecast. So see you next week for more. All right, have a lovely week, guys. Bye.